Could Great Britain collapse? After all, some are saying the country has been margin called, and there are now literal calls to overthrow the government, replace parliament, because the government has, quote, lost control, and that Great Britain is now sinking. I kid you not, sinking. That's because companies like The Economist are now putting the new Prime Minister, Liz Truss, who's replaced Boris Johnson, and her essentially Treasury Secretary, known as the Chancellor of the Exchange, Kwasi Kwarteng, on a sinking little dingy boat. Yes, that is labeled Great Britain, which is sinking. And they're not even trying to bail it out. They're making it worse. Folks, why does this first of all matter to you? And then could this country collapse? And why is this happening? Well, these are all things we're going to talk about in this video. Let's first understand why this matters to you, because you might be wondering, like, hey, look, I'm American, like, I don't really care about this. Like, Great Britain is the 5th largest economy in the world. It's followed by Germany, which is the 4th largest economy in the world, which is having its own issues. This video isn't about Germany, but it's worth noting that Germany was expecting inflation to come in at 10.2% this morning. It actually came in at 10.9%. That's right, almost 11% inflation. And that doesn't bode well for the entire continent of Europe, especially because of the madness that's happening in the United Kingdom, who's not exactly helping with inflation. If anything, by some accounts, they're making inflation worse. Frequent commenter Mohamed El-Arian, who is also a former IMF deputy director, suggests that the United Kingdom is incredibly incompetent. And the BBC goes as far as saying many pension funds in the United Kingdom were at risk of collapse, and that there were serious, urgent actions required due to, quote, material risks to the UK's financial stability. Folks, these are crazy and scary words. Back in 2008, there were rumors that we were just hours away from shutting down credit card networks in America. And if we shut down credit card networks in America, our economy would just collapse. We'd start buying wheelbarrows because our currency would be absolutely worthless. So, what's happening in the United Kingdom, and why does it matter to us, first of all, as Americans? Well, the first thing you need to know is very, very simple. When people lose faith in their country, and they lose trust in their country and their institutions, one of the first things that happens is the value of their currency plummets. Y'all remember the days that $1 would only buy like 50 cents of a British pound? Yeah, well, those days are long gone. We're almost at a 1-to-1 ratio. It used to be that if you took like 1 British pound, you would get $2. Now, you take 1 British pound, you get $1.07. That went almost to parity, which is 1-to-1, at $1.03 just Monday. And the reason currencies collapse when people lose trust in their government is because people, and institutions mostly, move their investments to other currencies they believe have more trust, because they don't want to be caught on a sinking ship like the Weimar Republic or Zimbabwe, where you have countries that don't control inflation and the money goes to crap. Now, you might be thinking that, well, the United States has a fiat money system, like this is all just paper money backed by nothing, and we don't trust our currency either. Well, maybe you think that, maybe because you're into crypto or whatever. But the reality is, when you put together all of the countries in the world, and you say, which country, if you had to pick one, has the strongest currency? There is no stronger currency than the United States dollar. There just isn't, especially when you can get risk-free returns on your dollar right now by buying treasury bonds at 4%. Okay, like the dollar is really, really strong. But this is a problem because as the British pound plummets and more people move over to strengthen the United States dollar, we actually make it more difficult for multinational companies within America to keep their earnings up. This is called a massive foreign exchange risk, because the products we're selling, like Teslas we're selling in China or Europe, give us currencies that are worth a lot less, and they hurt our earnings per share at American corporations that sell products around the world. So if you're in the stock market, you care about this. Like, this matters. So now we know this matters, and we know there's a disaster happening. Is the United Kingdom at risk of collapsing? Because right now, it doesn't look too good in terms of the disasters that are going on and the headlines that are going on. And it'll be nice to kind of know what's going on. So let's answer this. So first, it's really useful to start with a baseline of what's going on. Almost every country in the world, central banks and fiscal regimes are tightening. That means they're slowing stimulus. They've turned the money printers off, they opened up a drawer, they put their money printers away, and their goal is to spend less money to bring inflation down. Let's reduce the amount of money in circulation, like the M2 money supply, right? Let's reduce that and bring that down. See, central banks are like the Fed. Fiscal regimes are like Congress. Almost every country around the world is in unison, with the exception of China, because, well, they're screwed. But that's for a different video. Spend less, raise rates, tighten conditions, bring inflation down. Then here marries in the fifth largest economy, the United Kingdom. Oh no, the economy is going into recession. Well, what does the 2020 playbook say? Oh, let's spend more now and we'll hurt less people overall. Okay, yes, it's a very good idea. Let's go do that. Boom. Now, a modern economy like the United Kingdom is going in the opposite direction of everyone else because they all of a sudden think they're unique in going through a recession. And they want to make sure they prop up their GDP because, after all, we're a country of entrepreneurs. That's literally what they said. And so, therefore, forget everybody else having inflation problems and just forget about inflation. Let's just print our way out of a recession. And the Bank of England's monetary regime is like, what are you doing? We are tightening. Yet at the same time, the bank's financial crisis team is like, no, let's loosen, let's print more money. So even within the central bank of England, you literally have like one side saying tighten, one side saying loosen. It doesn't make sense. And it creates a very dangerous precedent of telling the market, okay, hey, if y'all get margin called, don't worry, we'll just take the printer back out. No problem. Margin call, we can solve it. It's just 2 weeks of printing. Don't worry. We'll put it back away after 2 weeks. It's literally like Jeffrey Dahmer. Come on. Just one more heart, baby. Just one more. Just one more. We call it the blinking first error. And the United Kingdom is blinking first. It's so bad now that markets are so angry at the Bank of England that they are starting to price in potential emergency action from the monetary regime of the Bank of England that'll come out with a 150 basis point hike of interest rates following their last baby 50 basis point hike to try to offset all of this insanity that's happening at the other end of not only the Bank of England, but also the government, which is bringing out the money printer. We're like, okay, well, you're gonna bring out the money printer. We're gonna have to raise rates more. This is literally like, imagine this. Imagine Janet Yellen and Joe Biden going, oh yeah, baby, let's print it. And Jerome Powell being, all right, guess we gotta raise rates even more. It's just insane what's happening. And this is why you've got organizations like Goldman Sachs and Credit Suisse saying this is a disaster. Housing prices will probably fall by over 15%, and we're gonna have a crisis in the United Kingdom. But like, what was the foundation for this? What was the real reason for all of this mess? So, well, I'm gonna explain that. I just wanna mention, this Friday, I'm announcing a massive, massive overhaul to the Path to Wealth course, and you're gonna wanna be in it before the coupon expires on Friday. Actually, we'll probably do the announcement on the weekend because we've got the coupon expiring on Friday. And I'm really excited to bring a lot of new and exciting access to those of you who are part of these programs. I just recommend that if you wanna join me in private live streams and you wanna go through all of my lectures on building your wealth and understand how do I know what I know, how do I research what I know, you want to learn everything that's in Kevin's brain, you can learn it all linked down below, whether it's in real estate and stocks, the psychology of money, you name it. And even though we're going through a tough economic time, I think now is the time to learn and become an expert at finance. And I believe that you could do that. I strongly believe you could do that via the programs on building your wealth, linked down below. Dollar for dollar, I think you get substantially more value from these courses than you possibly ever could from a college program. And that's not to pat myself on the back, to say these are incredibly inexpensive relative to what you would spend on a finance degree. Now, not suggesting you can walk out with a finance degree, but I think you're gonna have a whole lot of knowledge that's actually going to give you what you need to become a millionaire. Check those programs out, linked down below, and use the coupon code expiring Friday. Okay, so what is like physically happening in the United Kingdom, and why is all of this disaster? What started all of this? Well, here's what started all of this. First, Pension funds saw the value of their bonds lose as much as 50% in just a few days. The plunge was so sharp that pension funds started getting margin calls, but a lot of their equity, like their net worth, was tied up in things like real estate and private equity, both really illiquid. When you get into private equity, you don't expect to be able to sell it at any point in the future until there's a liquidity event, like an IPO or something in the future. That's what private equity is. And real estate takes time to sell. Consider me. I sold most of my properties, about 85% of my real estate, about 22 properties in Southern California, in the first half of the year. It took me 5 months to sell all of them, and I consider myself like a serious and sophisticated real estate professional. So imagine if you're not that, like you're just a normal person, it's not that easy to break the piggy bank of real estate. It takes time. Right? So this takes longer term planning. Now, unlike the United Kingdom and these pension funds, I didn't get margin called. I sold to create my startup, HouseHack, which you could learn more about by going to househack.com. But the United Kingdom's pension funds saw this plummet in bond value portfolios in part because of actions that were announced on Friday by the government and the Chancellor of the Exchange. They announced the biggest tax cut in 50 years since 1972. Their equivalent of the Treasury Secretary, Kwasi Kwarteng, believes that England should reward work and people should keep more of the money they make. This is a very traditional conservative principle. Tax people less, essentially. Let people keep more of their own money. This is where he calls the United Kingdom a country of entrepreneurs. And he also suggests that because we have a worker shortage, if we lower taxes, we might encourage more people to work, and we'll also lower subsidies for those people who are not working, reducing the social safety net to hopefully force these people to go to work. They've also announced things like the following. Number one, stimulus for households and businesses via energy subsidies. That's more spending. A lower corporate tax rate. Instead of hiking the corporate tax rate to 25%, they'll keep it at 19%. A lower personal high-tier income tax bracket for higher net worth or higher income individuals. No more 45% bracket, going down to 40%. Number four, other incentives for developing real estate or even buying your first home, and changes to the stamp duties, lowering taxes. Again, a lot of more spending and a lot less tax revenue. However, they're not actually releasing the full budget until, we get more details on Friday and then more details again on November 23rd. And the reality is this spooked markets. Markets freaked out here and thought, oh no, our country is going mad. The Liz Truss government doesn't know what the HE double hockey sticks is doing. Let's sell the pound because we've lost faith in it. Selling the pound has also been leading to a lot of selling of bonds, which leads to this collapse in valuations at pension funds. So people are like, get me out of the pound, let's dump the bonds we have, and let's go buy something else, like some American bonds, right? But the problem with this is the more money you spend, the more inflation you end up creating. And ultimately, when the pound weakens, you create what's known as higher imported inflation, leading to more eroded incomes. That's at least according to The Economist. And you've got Liz Truss, who came out in reaction to all this, who just took over from Boris Johnson, Mr. Partygate, came out and said, hey, you know what, the government's doing the right thing. We had to take urgent action, so don't worry. We will do what we need to do to get out of this recession. Well, that also hasn't led to any confidence that the government actually knows what the heck it's doing. In fact, if anything, it's leading to more moral hazard. And this moral hazard is probably the biggest danger here. The Economist goes as far as saying the Liz Truss government has created more economic and political damage in the past week than Boris Johnson did in his entire administration, or at least that's what they're implying. So you create really big issues here solely because A, people are losing faith in the United Kingdom, but also B, you have a policy system that truly doesn't make sense. You're creating inflation and importing inflation. Both at home, you're creating inflation with more spending and less taxation, but then you're also reducing the value of the pound, so you're importing inflation. This is a disaster. So two forms of inflation, and you're leading to uncertainty, but you're also creating moral hazard. You're creating this idea that, oh, well, hey, if we get margin called as an institution in the United Kingdom, don't worry, here comes the money printer. And you also potentially encourage other countries around the world to go, yeah, well, if the United Kingdom's doing it, we'll take out our money printer too. Could you imagine if the United States brought out the money printer again? I mean, this is a disaster. And we don't exactly know where the fallout of all of this is going to be yet. But look, this is bad. And somewhere things are going to break. Valves are going to burst. And somewhere this is going to hurt really badly. Do we know where exactly it is yet? No. Is it likely that the United Kingdom is going to collapse? No. But does it mean that inflation is likely to stay a lot higher for a lot longer? Probably. It's kind of devastating, and we've really got to pay attention to it because it's probably going to continue to drive bond yields up throughout the world. And the more you have countries bringing out the money printer, the more countries like America end up having to hike. I know that sounds ironic, but America is tired of high inflation, and if other countries are creating prices going up, the United States is just going to hike more to offset their increases in prices and their crazy inflation by making sure we almost get squeezed into deflation. It's scary. Thanks so much for watching, folks. We'll see you in the next one. Goodbye.